Time now for an in-depth look at the market news as we start a long holiday weekend. And for that, I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, good to have you back on.
Happy to be here.
Well, stocks in New York seem to take a breather overnight. Not a huge movement, but the Nasdaq did close above 14,000 for the first time. And it was touch and go here in Seoul, but the KOSPI closing with a decent gain. What's the story in the global markets?
Okay, well, as you mentioned, the Dow and S&P did have a slight fall, whereas Nasdaq continued to rise. And this just seems to be simple profit taking. Most analysts do believe that the stock market will continue to go up. Treasury Secretary Yellen said that if the Biden rescue package is passed by Congress, U.S. may go back to full employment levels by 2022. The fourth quarter corporate returns are coming out, and it's better than expected. And there has been a continuing commitment by the Fed that they will maintain loose monetary policy and low interest rate. So the trend seems to be that the stock market will rise, but because there's lot of difference between the fundamentals of the companies and the current stock prices, you will probably see record highs coupled with many adjustments throughout the year. So we'll probably see a somewhat volatile market and a somewhat nervous market. European stocks fell slightly or held steady. They seem to be following the U.S. market cues. Asian stocks, Nikkei rose slightly, but Shanghai and Hong Kong Hang Seng rose significantly today. Shanghai rose by 1.6%. Hong Kong rose by 1.8%. KOSPI seems to be recovering from the fall we had last week. It rose above 3,100 level. Rose 0.86% to 3,111.26, partially due to foreigners buying 750 billion won's worth of stocks. Kosdaq went up 0.68% to 964.41.
Now, there's a lot of talk about potential inflation. We've seen the yield on the 30-year U.S. Treasury bond crossing back above 2% for the first time since the pandemic began. Some of that talk is coming from the Dallas Fed president. What do you make of the situation, Professor?
Okay, well, this touches on a mystery that we had since the global financial crisis in 2008. Since the 2008 financial crisis, major central banks have been increasing money supply for a long time. It has, theoretically, we should have inflation already, but low inflation is maintained. Most economies had below 2% inflation even before coronavirus. After the coronavirus, the money supply, base money supply went up even further, but we're still seeing low inflation. One reason may be that compared to the increase in base money that central bank prints, you expect to see M2 increasing as well, but M2 had not been increasing that much before the coronavirus. However, a big difference now is that M2 seems to be climbing up as well, and that has some analysts concerned, including Lawrence Summers, who was the Treasury Secretary under President Clinton in the United States, and also World Bank chief economist and currently Harvard professor. And he has warned that the Biden rescue package, if passed as is, might spark inflation because of the large amount of money supply that is out there. But most academic economists right now, because we've seen such long period of low inflation, believe that inflation is not likely to rise even with the continuing high increases in base money supply. But again, the reason why the inflation is so low is not well understood right now. So basically, we'll have to keep on watching.
We will indeed. Thank you for shedding light on that situation, Professor. We hope you have a happy and safe holiday. Thanks for coming on.
Happy New Year to all.